Hey traders, let's go over the free video of the day. Had a real good morning. Took a lot of exits and longs that I bought yesterday afternoon. And now we await the FOMC. But before we get into option flow, look at the market Eternals today. Definitely something to keep an eye on. You see how we gapped up off the CPI report. And then you can see about 10 minutes prior to the U.S. market open, we started to sell. We filled that gap already. Remember, about 80% of gaps do get filled. The market Eternals confirmed the move to the downside. As you see, as soon as the stock market opened, the ticks went from positive, obviously with the big gap up, and started going negative very, very, very shortly after, and now trying to catch a little bit of a bounce here. And you can see the advanced decline line, so stocks advancing versus stocks declining over their previous traded price. This is a 1 minute chart. So you can see how many stocks gapped up and then sold off. So what did I do? Took profits in some longs like Meta, Coinbase, that I bought yesterday afternoon in the short-term options, obviously. And then the trend has been rising. Had a very extreme trend reading on the big sell-off here. I expect this trend to come down. It really can't hold right around 2 or higher for long. So if the trend comes down, we get a bounce in the market. Bounce, as you can see here, we're starting to get a bounce as I'm talking here. Obviously, anything can change at 2 p.m. when you have the Fed speaking. You know, that's a coin flip. But real nice trading day. Everything pretty much went according to game plan and really, really doing well. Peloton seeing some May 9 puts. Obviously, piece of junk turning into penny stock category. So, have fun with that one. Not big enough for me. That's what she said. PACW. Again, I will mention these boring banks continue to see put activity. Seeing the end of April, 10 puts, stock getting hit today, FRC getting hit today as well. And why don't I like these FRC calls? You may be asking. Well, they're the 20 strike calls. The stock's at 1380. Heck no, daddy-o. And then ASML had a couple different lines of call buying, and you can see the share starting to pop here. This is a chip name. Seeing some calls right there, and ASML. The chip name's very volatile, but obviously the daily chart for a swing trade very nice. Obviously, this trader is not swing trading, buying the weekly 675 calls, right? So they're just looking for a short-term move. Probably play on the FOMC later today. So you got to be nimble. That's the name of the game. In, out, short-term trading. And I prefer the cheap options. That's kind of my style out there. So I'm not having to risk a lot of capital, but can still get exposure to small moves in stocks, which is what I'm looking for because, the markets are not trending. It's not champagne and roses. You're really having a grind every day out to try to make some gains. It is a trader's market. And if you're not on top of it, you're probably, getting left behind and losing money. So make that, take small positions. You could take swings at the bat, but don't be looking for that grand slam. It ain't coming. If it does, you probably got lucky. But if you could get singles, some doubles in there, that's how you stay alive until the market starts trading again. And then you can push. Then you can start getting more aggressive. But until then, it is a short-term trader's market out there.